Millions of people are being declined loans. You may be one of those. And it's not because you don't make enough money. It's because of credit reporting and your credit score. In this video, I'm going to share with you the changes and the shifts that are being made to credit reporting and how you can avoid it affecting you in a negative way. I'm also going to share with you what you need to be doing to make sure your credit score doesn't drop. And most importantly, the action steps that you can take to boost your credit score 60 to 80 points in the next 60 days. The exciting thing is this doesn't cost you any money. You see, credit score changes are happening because of the systems that the lenders are using, Vantage Score 4.0 and FICO 10T. But here's what they're not telling you. These new models are far more detailed and sophisticated than the old-fashioned models, but here's where it can hurt you. Have you ever seen those buy now, pay later, where you can buy something and not have to pay it for 6 months or 12 months or even 18 months? We see furniture companies do that. Nothing wrong with that, but here's where it can really bite you. If you don't pay those payments and all of a sudden you miss one payment, or you don't pay those payments, or you can't catch up, for example, they tack on all of that interest, and not only will it ding your credit score pretty good, you're now paying a lot more interest than you've ever thought possible, and that's what's in the fine print in a lot of this information. However, there's some good. You see, lenders are now able to look at things in much more detail. Utility bills, mobile phone bills, rental history, all of that. And it's really good. However, if you're late on anything, just like a credit card, it can negatively affect your credit score. But here's some steps I want you to take that you can do starting right now. Step one is to pay the minimum balance off before the cycle ends. For example, if you put something on credit today, try to pay it off next week. You can do that purposely. That will help you boost your score. You can go purchase something $10, $12, $15, and you can literally pay that off next week. You also do not have to wait for the cycle to end. So for example, if you put something on credit or you've got a minimum credit balance, you do not have to wait to the end of the month or to receive an email or to receive a statement. You can go online and pay that before the cycle begins or before the cycle ends. Step two, and I know this one's hard to do, but it's to keep your balance 30% of your credit limit. So in other words, if you got a $5,000 card, 30% of that would be $1,500. You want to stay $1,500, 30% or lower. If you can do 10%, that's even better. Now I'll show you a trick here in just a second of how you can do that without having to put a cent or paying anything on your credit card that will boost that percentage. Now step three is pretty common sense. You want to bring all credit cards current, but if you have any sort of a late pay on any card, call the credit card company and ask them if you paid it in full, could they and would they remove that late pay? So in other words, that would remove the ding that's on your credit if you pay it in full. A little trick and hack that I want to share with you is that you can call each credit card and ask them to increase your limit. In other words, your available credit limit that you have to use. When you do that, it decreases the percentage that you've used on the card. You go from a $5,000 limit to a $6,000 limit. Well, you just increased the limit, but you decrease the percentage that you're using of the card. And all of that didn't cost you any money. But here's what you have to do. You got to promise me this. Don't touch that money. The only purpose in doing this is to get that percentage down so your credit score gets bumped up. What's exciting about this is it doesn't take years. The frustrating thing is no one really tells you this stuff, not even lenders. And you don't have to pay a credit reporting agency or any kind of company to do this. I don't think they do it intentionally. It's just not in the scope of their everyday business. Most all businesses focus on the 5% of the people that want to buy now, as opposed to the 90% of the people that can buy into the future. But here's some lending practices I need to share with you. You see, we're seeing approvals today because scores are being eliminated. That's right. Fannie Mae, Freddie Mac, they basically said they don't want to see credit scores anymore. What that means is lenders are going to be a little bit more competitive with each other, and it's going to free them up to do a little bit more lending on more of a personal basis, if you will. And how they're able to do this, and another thing that has been done is $200 billion has been infused into Fannie Mae and Freddie Mac. They're the people, the company, the corporation that actually buys loans by the bundle. So for example, if somebody loans you money to buy a house, they take that money, they package those and they sell them. That frees up resources, money if you will, from lenders to give you a loan. Now, if you've got a second, you're still with me, thank you so much. I appreciate it. Like, share, give me a thumbs up if you like this information. An example of a loan is a business loan. For example, if you have gross deposits coming in, you own a business, let's say you have $2 million in gross deposits coming in. They take your gross deposits that you put in the bank. They don't look at anything, they just look at your gross deposits. And they take those gross deposits and they divide that by 2. So if you had $2 million coming in from a business, they divide that by 2, leaves you with $1 million. They take that $1 million, they divide that by 60, and that money is what they approve you on for a home loan. Now, another example is an asset loan. Let's just say you got $300,000 in the bank. You don't want to spend all your money and pay cash for a house. You can take that money, put it in a trust. When you put it in a trust, it shows the lender that it's in a trust. It's in an irrevocable trust that you can change, but it's in a trust. It's really simple to do, and it shows them you have $300,000 in that account, right? They take that money, divide it by 37, and that's your gross income that you have to qualify on a loan. But here's something else I need you to avoid. You need to avoid making the mistake that you think this is a zero down loans. The business loan, for example, you're gonna need 20%. So if you have $1 million after $2 million deposits, you're gonna have 20% on whatever house that you purchase. You purchased a $500,000 home, you're gonna need 20%. That's $100,000. And the reason why they do these, and something else that's really important, is you gotta have a 660 or higher credit score. You have to understand, they do these loans because the likelihood of you defaulting as a business owner on the loan, if you have an established business that has been established for 2 years, it's very likely that they're gonna have to foreclose. It's very likely that you're gonna stop paying because you just put $100,000 on a home, you have equity. The other is the asset loan that I mentioned. And you have to understand that you got to put money down on these transactions. You got to put money down on these types of loans. The exciting thing with the asset loan, though, is you can actually do an FHA loan with 3.5% down if you wanted to. You can do a conventional loan with 5% or 10%. You can put 20%. It really doesn't matter. Now, the score for that is 620 or higher for those asset loans. Now, to help you with a plan to start on this is called a snowball effect. You may have heard that. The snowball effect is where you literally take your lowest balance of a card. Don't look at the interest. Take all and any credit cards and anything that you have, student loans, hospital bills, vehicle payment, doesn't matter. Take it all. Put the one that's lowest on top and the most expensive on the bottom. In other words, if it's a $200 balance and then an $800 balance and a $1,200 balance and a $1,500 balance, and here's what you want to do. Pay minimum on everything, every single month. If you can, pay it early like I mentioned. And you want to put everything you can, every cent. I'm talking selling stuff, dumping stuff, getting rid of stuff that you don't have. Nobody needs a storage unit, get that stuff out. Once you do this, you'll want to pay off the minimum card as quickly as possible. It really helps you mentally because psychologically, mentally, you just had a win. You just paid a $200 card off. And then you take everything minimum that you've been paying on the 2 and then some, and then you pay the $600, and then you pay the $800, and then you pay the $1,200, because that's going to give you a win. It's very exciting to be able to do that. Another thing that you want to do, this is an absolute must, is you want to pull your credit report. You want to see what your credit score is. Don't be afraid of it. Grab this bull by the horns, man, and grab your score. Reach out there, My FICO, free credit report. I use My FICO. It costs you a little bit of money. I think it's crazy that you got to pay to actually see your credit. There's some free ones out there. I don't know if they're as good as some of the ones that are paid. Maybe they are, maybe you know. If so, chime in, leave your comment. But you want to stay on top of your credit, and you want to get notifications absolutely anytime your credit score goes up or down. You want to get emails, you want to get text notifications. Not only do you want to see what your credit score is, and you want to see what's on your credit, because lenders pull a tri-merge credit report. Experian, Equifax, and TransUnion. You've probably heard of those. Those are the 3 largest credit bureau agencies, and they've been there for decades. And if there's anything negative on your credit report, it may not be you. There's people out there who have the same name as me that live within 40 minutes of myself. You're the same way. We have the same different fingerprints, but we have the same name. So what happens is wires get crossed. It's just part of it. And anything that's on there negatively, you want to get it removed, because they have to remove it or explain and tell you why they can't remove it within 30 days. Now I've got a couple of more things I'll share with you. Never, never, never do these, especially if you're looking to buy a house in the next 6 to 12 months. It's getting a little late. I appreciate you being here with me. If you like this video, share it with somebody, subscribe to the channel. It's free. We're not going to come knocking on your door or anything like that. It just gives you, my goal is to be able to help as many people as I can. I've been in the real estate business for 30 years. I've bought, flipped, sold. I've helped thousands of people buy their homes. I've owned brokerage companies. I only share that with you so you can have the comfort and the confidence knowing that what you learn from me is from actual real life experience. So 2 of the things that you never want to do is you go to a department store and purchase something and they'll offer you 20% discount. Don't do it. Don't open up any new accounts, none whatsoever. You also do not want to close any accounts. If you pay credit cards off, do not close those accounts. It's unfortunately, it's crazy. Don't ask me why. It makes no sense whatsoever. But if you actually cancel a card, your credit score actually drops. Now, one thing you also want to do is anytime you ask for a credit increase or a credit limit bump on your cards, you want to make sure they do a soft pull, not a hard pull. There's 2 differences there. When you do a hard pull, it can drop your credit score literally in the double digits. So you want to make sure, I don't know if I said that before, you want to make sure that you have a soft pull. If they say, no, we got to do a hard pull, then say, no, just forget it. Don't do it at all. Listen, I hope you like this video. I hope you got something out of it. My goal is to help as many people as I can with your finances, with your credit, to be able to purchase a house and live comfortably in your life. I thank you for watching. Until next time, God bless you.